Hi, welcome again to another edition of Market Analysis for today, March 3rd of 2025. I'm Gio Benecourt, and this is a recording right about 45 minutes prior to the U.S. session open. And, this is done by Vantage Markets. Well, let's get to it. The stock market loved U.S. President Donald Trump when he swept to victory in November's election, but now investors are finding him hard to read. It has led to a volatile few months. A brilliant November was followed by a disappointing December. Then a strong January was almost entirely undone by a weak February. The market is doing its best to price in what's coming under Trump 2.0, but it hasn't always got it right, despite many of the policies being heavily trailed. For example, Trump's announcement of a crypto strategic reserve sent digital assets soaring over the weekend, but it's nothing new. In fact, Trump promised to create one on the campaign trail. Conversely, if the White House goes ahead with the plans of 25% tariffs on Canada and Mexico Tuesday, a policy about which Trump has been very vocal, it will still likely catch the market by surprise, though this time to the downside. So, the intense meeting between the U.S. President and Ukraine's Zelensky was something very few could have predicted. Markets have again been caught off guard with European defense stocks soaring Monday. However, Trump has long promised to end the war in Ukraine, so such as a scenario was always a possibility. Then there are the indirect consequences of the administration's policies. Consumer spending data have been weakening recently as the threat of tariffs weighed on Americans' minds. A flurry of retail earnings this week will reveal more. The market's guessing game is likely to last the best part of 4 years, but this week could also answer some pretty big questions on the rules of engagement. If the tariffs on Canada and Mexico come into effect as threatened, then it might be time to take the president's policy remarks at face value, however painful that might be for stocks. So with that being said, let's take a look at what we can speculate for the market's fluctuation could be today. We see that the Nasdaq has opened gap up and it has been closed on the London session, and we are in the green today. So therefore, let's just update our levels. I'm going to leave the 50-day moving average as my first level of resistance, and then these swing highs here that show me a place where the market could probably find that resistance. So the lower Bollinger Band is going to be my first support, and Friday's swing low is going to be my second one. So the consensus or the sentiment so far, let's go with the direction. So could we have said that the market has created that low, that bottom now after having so many days in downtrend? So could this be a reversal? Let's see if that's the case with that gap up on the Nasdaq. As far as the S&P, this gap up also occurred, but it happened above the 50-day moving average, which came down. It was closed. So therefore, let's just use Friday's swing high as my first level, and then the 20-day moving average within the Bollinger Band as our second, then the lower Bollinger Band as our first level of support, and then the swing low from Friday as well. So there you have it. Then the Dow, let's just also gap up. So the same consensus, it could be the markets are going to be trading higher today. So let's use a 20-day moving average, and right around this just make this our second. We quite a distance between the resistances levels, but that's what the chart is throwing. So let's use a 50-day moving average as our first, and the lower Bollinger Band as our second. So here we go, looking to push higher on all three indices, major indices. Then we have crude oil. Okay, so crude oil is in balance right here. Is basically doing the same fluctuation as of Friday. Okay, I'm gonna leave the same levels that we had on Friday, all right? And I am going to, I'm actually thinking, looking at this, basically equal fluctuation, equal swing, I'm gonna push higher. Let's see if $71 will be met today. So buying crude oil, Nat Gas. I'm going to anticipate, or I'm going to speculate better, that Nat Gas, even though it opened gap down, is looking to recuperate itself and close into the upside. I'm gonna use Friday swing high as my first level of resistance, and around that previous swing high as well, and the same levels, but the levels I just placed. So let's see, a reversal move to the upside could be nice. Gold, okay, so gold is also in balance with last week's market fluctuation. I am going to update and just with the 20-day moving average as my first level of resistance, and my second, I'm going to make it 29.40 right here. Okay, 29.40. So looking to buy gold. The lower Bollinger Band almost coincides with that swing low, so I'm going to leave that also there as levels of support. And I'm looking to buy gold, rebound of gold with all of this scenario in regards to Ukraine. Geopolitical uncertainties is at the helm, so let's go with that. Swing highs, looking for swing highs. The 20-day moving average is just too close to that, to this basically first level. For silver, I am going to just use the 50-day moving average and that swing low for support. Parabolic movement on silver, retracement of all this could be seen today or this week. So being long silver, being long the metals, copper as well. I'm gonna leave the same levels that they haven't been touched. So looking to buy metals, looking to buy the energy. Okay, Bitcoin did a nice. It took a big dive last week. Fluctuated below 80,000, rebounded right around 78,000, and we saw yesterday how it had just a tremendous parabolic movement back up towards the 95, 96 pivot point that we have been seeing on Bitcoin. So I'm gonna just use the upper Bollinger Band. Then support is gonna come at 88,000 psychological round value, and then the second is gonna be the lower Bollinger Band. So I get another pop to the upside. It could be anticipated. So going long, the currencies, nice move to the upside. 105 is the target for today. I'm gonna leave the same levels of support that I have here. I'm looking to continue with this bullish movement in the currencies. The pound also trending higher. So let's use the extreme top of upper Bollinger Band as my second level of support, and then 127 is going to be the target for the pound and first resistance. Then as far as support goes, we came down. This candle really did open gap down, but it has been closed in such a tremendous force. So really just searching for a level of support for this puppy. Let's just use previous swings, extreme swings, to find that support. 125, actually 125 could be much better. Psychological round number. Okay, there we go. Let's use that. Looking for a continuation move higher as the dollar index also continues to trend lower. So let's see if it reaches the 50-day moving average. Then 107.5 is going to stay as its resistance. So keep that in mind. If we do continue to see that the dollar index drops, then we'll see a move up, because it did open gap down. This candle open up here, and this one close up here. So It opened, got down, so keep that in mind. All right, have a great trading day. I'll see you tomorrow.